What's up guys, 1% Trading here. Today we are going to cover Fibonacci retracement. So this tool that I have right here, Fib retracement, is probably a tool that you've already seen many times and is used to measure how deep a pullback will be. I already covered a few things about Fib retracement in my previous videos, so if you missed that one, make sure to check it out. It's definitely very important. But today I would just like to cover the basics, because if you're completely new to trading, or even if you've been in this industry for a while, you probably use this in a way that is not very efficient. So let's go somewhere back in time. I don't know, just whatever. Let's find. Well, we can just start right here. So, okay, so the basics. Fib retracement. If you have, let's say that we have an uptrend. This is a new higher high, and this will be a new higher low, and we measure from point A, point B, and this is the retracement that we are measuring, right? And if the uptrend continues, we will see something like that. Now, what you're probably used to seeing is not Fibonacci retracement like this one. You would normally have many different lines and the colors and all the different things. Let's yeah, this is somewhere in between. Let's see. So this is what you would normally see. As you can see, it's very messy. So you have a million different lines, and not only the extensions, but also at what price this is, and the colors, and it takes a lot of your screen, and you can really drown in it. So if we go back to this, and I will share all of my retracements with you. It's not a secret really. So the important part is 0.27, and so the minus, this is the projection, the first projection, and the second one is 0.618, this purple line right here. All the other, so the three retracements that I have, so 0.618, 0.71, this is not a standard one, and 0.768. This is not used really often. I don't use it personally because it doesn't really give you any information, so it's basically useless, but you can keep it just maybe to get an idea where other traders will be looking at short or long trades, so maybe from that perspective, but otherwise it won't really help you much. But the target projections that I mentioned, so the most important one, 0.27, is very important, and of course also 0.618, also very useful indeed. So if we look at this example, and let's just assume we knew that the market is going to turn from this point, so we take point A, point B, always also you will see people talking all of the different methods, and I don't know, it just always go from week to week. Okay, and of course this will require some practice, just so you can recognize a low or a high, or which point you should take. So yeah, that definitely comes with practice. Now, so we knew that the price is going to retrace and then continue lower. Let's just assume this to simplify everything, because we are just covering the Fibs at the moment. Then what I would look for is for this and this target to be hit, but there's a catch actually. So you never want to trust your Fibs 100%. As I already mentioned, the only thing that Fibs are useful, and you probably, I mean, at least I haven't heard anyone else use the Fibs in this way. Everyone is looking at the, I don't know, 0.618 and then saying, oh, this is confluence and blah 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 blah. This is all BS. The most important part is the target areas, but that can't be trusted 100% either. So you always would want to actually find some confluence from the past. Now, let's say that we targeted 0.618. This is a perfect example. Even if I would look for it, I probably couldn't find it, but this is a perfect example. So week to week, and 0.618 wasn't even hit. It was just a few pips to our target, to our second target. So our first target would be somewhere around here, but our second target wouldn't be hit because we missed it by a few pips. Now, the point I'm trying to make is that you always need to base your target off something else as well. So in this case, I would take this, for example, the body of this. I think we're on a 4-hour chart, and this lines up perfectly. In this case, right here, I would take also the bodies of this candle in the past, and in this case, for example, if you look at we all know that market likes to turn around big numbers, so let's say psychological levels, as some would like to call them. So for example, if you see 1.285, this is a round number, 1.28 again, and you can also, like, let's just yeah, in this case, if we, so this is a little bit zoomed out, zoomed in, and as you can see here at our target, there's no real round number, so we would actually aim a little bit higher. Also, just a quick tip, this doesn't have to do anything about Fibs, I mean to a certain degree, yes, but if you, let's say that you find that you would be targeting this area, always, I mean really always, put your take profit just a slightly bit above this level, because you don't want to risk your take profit not being hit just because of, I don't know, spread or whatever. So always put your take profit a few pips. So if you're short, a little bit higher; if you're long, a little bit lower of your target. So in this case, I would be targeting, as we said, round number 1.27. That's it, and the target would be perfectly hit. So yeah, that's one important lesson as well. Never trust Fips 100%. If let's say that you, let's take a look what was here. A, B, okay, this was perfectly hit. Also, in this case, it was, we see again. So we have round number here, 1.33. The price did not actually tap this round number. It was just maybe a pip or two below it. So if you would have your if you would be greedy and have your take profit quote unquote set correctly, but not really, because you didn't respect our rule that you always need to put your stop loss a few pips below or above your target, yeah, you wouldn't actually take any profit from here. Yeah, but other than that, as I mentioned, so the main points, if I just sum everything up, try to keep your Fips as clean as possible. As you can see on my chart, it's really clean, and then I wouldn't even normally put them. I would just do something like that. Bam. And it's like really clean. You can actually focus on the price action itself. You are not distracted by Fips, and yeah, it makes your life a whole lot easier. Then Fib retracement levels, you can keep them on, but they're not really useful and you shouldn't pay too much attention to them. Then the price and like everything else, try to remove everything so you have nice clean Fibs. And when choosing a target that you want to be hit, always find some confluence with the price action from the past, and that's pretty much it. I hope you learned something new, and I'll see you in the next video.